Hey, what's up guys? John here. 5 more banks have officially now been downgraded.
Multiple U.S. banks were hit with a downgrade from S&P.
S&P downgrading multiple U.S. banks.
And since Silicon Valley Bank collapsed, banks have only lent out nationwide $30 billion. Now, historically, over a 5-month period, banks would lend between $150 to $200 billion in loans. So banking has really seen a significant pullback when it comes to lending, and that's how they make their money. An 80% drawdown on that income is a real big problem. But there's some huge curveballs coming to the banking sector that I believe is going to have a really big impact on the real estate market, both residential and commercial, auto loans, credit cards, all bank lending as a whole. And there's a real big black swan event that nobody's talking about that I believe is about to wreck this banking system, this entire economy over the next month or 2 months. At least that's what the trend is showing. I'm going to show you this because it's shocking and nobody's talking about it. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the U.S. banking system and the economy and the real estate market. And if you want to fix your credit, you want to position yourself for the greatest wealth transfer of all time, which we are in right now. Started in 2020, it's ramping up. Right now, I think over the next couple of years, it's going to be unreal, the amount of wealth that's being transferred. And as banks start to pull back on lending, the first people to get cut is going to be people with bad credit and average credit. Average credit score in America is a 698. You want to be at 750, 770, 800 and above. At least 750 is at an absolute minimum. Ideally closer to 780, 800 in that range. If you need help, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Click the link in the description to schedule a free strategy session. Take a look at this. S&P downgrades 5 regional banks facing tough operating conditions. These banks are Associated Bank Corp, Commercia, Key Corp, UMB Financial Corp, Valley National Bank Corp, while revising its outlook on negative on 2 other regional banks, right? Well, look at this. U.S. bank deposits down $1 trillion in the last 14 months. Look at what's happening with bank deposits. This is absolutely showing you the true state of the everyday American consumer. People just have less money, but now they have more debt than ever. They have more debt than ever, less money to pay that debt. Interest rates are going to continue to rise. Fed Reserve officials continue to see significant inflation risk that may require more rate hikes. I saw this today. Just-in interest rate cuts are now no longer expected to begin until June of next year, 2024. How are Americans going to be able to withstand this amount of pressure that's being put on us? Everything is through the roof. They say inflation is 3% now. I don't know if anyone believes that. Everything is sky high. I believe we're going to start to see a lot of defaults on autos, on credit cards, on student loans, credit cards. Everything is just going to continue to get more and more challenging for everyday Americans. And so what's ultimately going to happen? Banks are going to start to underwrite risk differently, and they're going to lend less and less money based on the amount of risk that they're taking. And we're seeing it right now in the housing market. U.S. home purchase applications hit the lowest since 1995, right? This came out today, about 2 hours ago, right? So you're already starting to see it in the real estate market. I mean, American consumer debt stress is mounting. Mortgage rates top 7%. Credit card liabilities hit $1 trillion, and now auto loan defaults are on the rise. 7% mortgage rate, by the way, that is if you have perfect credit. I mean, like an 850 credit score, clean W-2s, cash in the bank, you're the ideal borrower. Even then, you're probably looking at 7.2, 7.3. If you have the average credit score in America, you're probably 8%. 698 average credit score, 8% mortgage. People can't afford it. They can't afford it. But what I find very, very fascinating here is this $1 trillion wall of worry for commercial real estate that spirals through 2027. In 2027, it's $2.7 trillion. So it's $1 trillion that is going to have to get refinanced over the next 12 months, and $2.7 trillion has to get refinanced from now until 2027. Well, how do all these buildings get refinanced if banks as a whole, the last 5 months, have only lent out $30 billion, right? Well, they're not. I think it's going to be very, very challenging for a lot of people to get loans. And so that's why I think that this is where this all kind of plays in. A record $5.3 trillion in cash is on the sidelines as investors get more bearish, right? So investors are getting bearish, banks aren't lending, and commercial real estate's in big trouble. Now, who are these investors? You have BlackRock, you have Blackstone, KKR, you have all these big firms. You have Starwood Capital sitting with so much money just waiting. They're waiting for a reason because they know that these buildings are likely not going to be able to get refinanced, and they're going to be able to step in and pick them up for pennies on the dollar. Banks are going to start to pull back in a very, very big way, and large institutional investors are about to really take over. Sad but true. If you look at what's happening right now, student loans, they're going to start to become due October, right? So in October, they're going to start to become due again. Payments will be due in October. Average payment, $503. So we're already starting to see these banks start to get downgraded. Imagine when people have to start paying $500 a month, average American. You know, it's going to be a problem. It's going to be a very, very big problem. But what I find very fascinating and how I think this whole thing is going to change is if you go to this website, it is treasury.gov, right? And it says, how much has the U.S. government spent this year? $5.3 trillion they've spent this year. Hit the back button and you ask, how much money have they collected this year? They've collected 3.6 trillion, 3.7 trillion. So they've collected 3.7, we'll round up, 3.7 trillion, and they've spent, they've spent 5.3 trillion, right? And what they said here is very fascinating because it shows us where we're actually, what's really going to happen here. So it says, according to the Constitution's preamble, the purpose of the federal government is to establish justice, ensure domestic tranquility, provide the common defense, promote general welfare, and secure the blessings of liberty to ourselves and our posterity. The goals are achieved through government spending, right? So promote general welfare, right? It makes sense because if you look at what's happening right now, they're saying 82 cities in America are now bringing in universal basic income pilot programs, up from 11 cities in 2021. So what do I think is going to happen? I think that we're going to start to see a lot more defaults. I think we're going to start to see a lot more dependence on big government. I think we're going to see a lot more money printing. I think inflation is going to get a lot worse. And I think that this is all going to get fueled here, possibly. 16 hours ago, $1.4 billion, right, for this new situation. But you look at all this, I mean, this is happening all the last 20 hours, right? Last 20 hours, this is breaking news everywhere. So could we have a situation where interest rates remain elevated for longer? We start to see a new problem hit this economy. People stay home, more money is printed, more dependence is made, and we start to see a complete restructuring of wealth throughout America. I think it's very likely. I think it's something that people should be preparing for. I think we're going to see a massive wealth transfer unfold. Smart and savvy investors are getting ready for this, are getting prepared, because this looks like it could be a real situation here. I mean, this is happening everywhere. Everywhere they're talking about this. 3 hours ago, 2 hours ago, 4 hours ago, 4 minutes ago. I mean, look, they're even Egypt. Like this is probably going to happen, right? This is probably going to happen. I would say the next month or so, we could see this real big contraction with consumer spending, and we could see some problems. But I'm curious what you think. I believe this, with these problems, you're going to start to see a lot of opportunities to invest in real estate. You're going to see opportunities to, restructure your business or potentially grow and scale a business based on, the changes in the world. I mean, try to see the positive in things. There's going to be opportunity for some, and there's going to be losses for others. The best that you can do, and the best that everyone should be doing, is preparing and positioning themselves to weather the storm, because it looks like the storm is in front of us. What do you think about this entire situation? Do you think that we are going to see this situation come back, and then with this, we are going to start to see eviction moratoriums? We're going to start to see all of these new changes that could possibly be hitting a lot of big cities in America at the same exact time. Big banks are not lending, and commercial real estate has to get refinanced, right? I believe that's very likely. I believe that we're going to start to see all this capital, $5.3 trillion in capital, get deployed in a lot of these properties nationwide, especially in cities such as San Francisco, Los Angeles, Boston, Chicago, Miami. We're going to start to see them in all the big cities, because it doesn't matter which city you're in or what the politics are in each city. Those loans have to get refinanced. They have to get refinanced. And if there's not a lot of banks issuing loans, the guidance in which you're going to have to meet to get these loans are going to be more challenging. In a traditional economy, commercial property, let's say, for example, it's $1 million property you purchased and you put $300,000 down, which is 30%. The bank lends you $700,000. When you have to refinance that property, you have to go through the entire process again. The bank is going to look at the income of the building. They're going to look at what the comps are, comparables in the area. They're going to say, okay, this building might now be worth $600,000, but you owe $700,000. So you have to pay us back $100,000, plus you have to put a down payment, We have to have a buffer. And that buffer might be 20, 30, 40%, or 50%, depending on what the conditions are in the economy at that time. So you could see a situation where people just don't have the money to be able to get that new loan, and they have to give the keys directly back to the bank, and then that bank might sell it to, one of these large corporations. I think we're going to see some really, really big opportunity in commercial real estate. I think we're going to see massive opportunity in residential real estate. I think mom and pop investors could be walking into a very, very big problem because mom and pop investors own a majority of the single family and 1 and 2 to 4 unit properties throughout America. And these property owners are going to do what in a stressful situation in an economy? Right? If the economy contracts and things become very, very stressful, they don't have cash, they have higher cost, they're going to start to sell. That's what's going to happen. They're going to start to sell. So my advice is if you intend to invest in distressed real estate, make sure you have great credit, like really, really good credit, not near the average. The average credit score in America, as I mentioned, 698. You do not want to be, 710, 720. 4 or 5 years ago, 3 years ago, that was fine. You could be there and you get a good loan. But now you're starting to see everything change. You want to put yourself in a position to where you want to be a top tier borrower so you can actually get financing. I believe there's going to be a big opportunity. I think there's going to be this massive wealth transfer is going to start to unfold possibly over the next 20 to 30 days is really going to start to pick up as we start to see more and more and more of this problem start to grow. What do you think about it? Drop below, hit the like button, add me on IG, and if you want to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. Click the link in the description to schedule a free strategy session, and catch you guys in the next video.